Good afternoon, everyone. Thank you very much for joining us today. Ivan, welcome. Thank you. Market's broken all-time highs. Some good trades there. Thank you for coming today. It is a very interesting market. Good for my trades. Good for people looking for breakouts. There's quite a lot of stuff approaching, and I guess another move we'll see a very interesting consolidation of that bull move. So, but let's go and have a look at what's going on. Now, have I given this yet? Any advice contained in this presentation is general only, doesn't take into consideration your personal circumstances, and you need to decide whether it's appropriate for you. Past returns are not an accurate indicator of future returns. Options are risky. All right, there you go.
I have been told the other day that apparently I interrupt sometimes. So I interrupted you during the general advice warning a couple of times. So anyway, I apologise.
So that's the first time you've had that feedback, is it?
Please forgive me.
Yep.
No, and
that explains
it
explains a lot. Right. Now, a couple of other housekeeping matters. One is that we have got a meetup session in Melbourne next week on Wednesday, and then the following Tuesday, is it? It's the 3rd of March. What would that be? That would be the following Tuesday. So there's one in Sydney coming up as well. If you haven't already booked in that, so what we're going to be doing is we've got Graham O'Brien from the ASX, who runs the equity derivatives market. He's going to be joining us. We're going to be going through and we'll do a couple of short presentations, have a panel discussion, talk about the market, talk about trades. We'll show off some new technology. And it'll be, but it's also drinks and I guess some nibbles.
Yeah.
And
I guess because someone else is organising it.
But there'll be drinks, and it's a great opportunity for us to, like everyone that's on the session, to meet and discuss and talk trading and so forth. So it is targeted at options traders. So it's really for people who are interested, like we all are, in trading, making money out of trading and trading options. So it's a really good get-together. We've done this in the past. It's been really successful. People love it. It's obviously, presentations aside, it's just a good opportunity for everyone to get together and have a drink and a laugh and have a one-on-one chat with everyone that's there. So it won't be a huge audience. It's limited seating. If you'd like to come along and you haven't already booked in, just go to the email that's been sent out. If you haven't got that, you want to just reserve a seat, type in yes, and I'll organise Darragh, who's coordinating the bookings and so forth, to book you in and then confirm your booking. We're not going, Carl, I'm preempting your question. You got there before me. Carl's asked the question, if there was an event in Brisbane I'd like to go in the future. We are going to, this is something Ivan and I have been talking about for some time. We've just got to get the routine of being able to run events going, these types of events going. So we will come up to Brizzy eventually. And I guess for the people that come to this first event, we don't really want to be running meetups where there's 200 people there. We'd rather have 100 or 70 options traders in the room talking options trading. And so for those of you that make the effort and get along, it'll be something that we'll invite you back to again and again in the future. So if you want to come and you haven't already typed in yes, type in yes, and I'll get someone to get the invite to you. There's no cost associated with coming to the event. It's something that we put on and we'll cater.
Seating, you said, so it's going to be like sit down? I thought it was going to be like stand up.
No, it'll be stand up. Yeah, it'll be stand up.
So if you want to register your standing spot,
box,
and there's like going to be crosses.
Yeah. All right, beautiful. And the other thing is, and Tim hasn't sent me this link yet, has he? Oh, yes, he has. So we with the options game, the last options game, we had a really nice bio from Moon, who won the game. We all remember Moon, the $1.6 million man. And he provided us with a bio, sort of just talking about his experiences as a trader and what he'd done and how he got to where he got to and what he was hoping to achieve. And we had that published. The ASX are going to publish it on their site. And we put it out through our newsletter. It got a lot of reads and got some really good feedback. And we would love it if if any of you would be interested in completing a bio, a review. I'm going to put a link in. It's just a survey, and it will just step you through some questions to answer. So if you go through and answer those questions, provide us a bio that way, then we'd love to be able to publish it in a newsletter. Feature you in the newsletter, but it's actually an interesting process to go through in just writing it, because it's a good way of reflecting on how you go about doing things. It kind of comes back to that whole trading systems, how you approach it, what you do, and so forth. So it's a good process to go through. I think it's a healthy process to go through, but it's also one that everyone else will be really interested in reading. And so I will send that out. Let me know if you got that.
I think it's chucked down in the chat. Yeah, it'd be super interesting. I didn't realise we were doing this. So I would love to read that, my bedtime reading.
Yeah.
See where everyone's coming from.
All right, beautiful. What are we going up on the screen here? So this is just something that we've been looking at recently. Brian, who's online today, triggered this conversation, and we've been looking at it. We haven't done the work looking at it to the level that we need to really draw a lot of conclusions, but it's coming back to approaching the market for looking for straddles going into reporting season. So, yeah, what do we got here?
Illumina 5 days away. 28 AV rank. That's interesting.
That just doesn't. Is it definitely a Fed? That would make more sense if it was a March. Anyway, so this is a sheet that we're going to work on and do a bit more. We're going to get some dividends added to the sheet as well. But we'll go and have a look at Illumina in a moment. And Tim, if you're listening, can you just double check the date for reporting for that for us while we go in? But probably more importantly,
there is somewhere in the app that we're going to look at in a sec, by the way.
Okay,
cool. Get it. But anyway. So, how's you're still in your straddle?
What is this? I am indeed. Yeah, I am indeed. How's it going?
I didn't ask. I know.
Oh yeah, it's going fine. It's going fine.
Yeah.
It needs a move. This is possibly the move. It probably needs a little bit more. Although since we've been talking, it's gone up a little bit more. So I'll go and have a look at that. Again, yeah. So we can go back to that. But this is XJO. So Lit Long has appeared today on the XJO. There's, where are we going over here? That's the only thing that's showing at the moment. I think there was something else up there this morning that's obviously pulled back slightly. XJO, Lit Long. Yeah. ADX is, that's early 20s. And we've had a 52-week high breakout. It's now this is a good breakout. Closed just poked its above head yesterday. You would have been, like, if you were trading into this yesterday, you would have been getting into this Lit Long really late in the day. Most people, I doubt, would have got to that. So this morning it opened really just slightly up. But it confirmed the move, so it would have been a good time to get in. And you're up at the races. Obviously, we've seen that recent breakouts have done quite well. And the 50-day moving average is a little way away. That's one thing to consider. But if you'll never do a trade if you worry about that too much. So there you go. Ivan, comment?
Yeah, I mean it's 180 points away or so, because if you think by the time that it actually comes back, it'll probably be around 7,000 based on the velocity of that moving average. But it's probably a good stop. You'd think around about 7,000 anyway.
Yep.
If you want to be a little bit more tight with your stop, you probably keep it around about 7,100. That's potentially one thing. So you're effectively saying, okay, well, I'm looking for a move that's going to be a large one. There was a little bit of space here, so if you're sort of potentially a little bit late to that piece, you'd probably be getting a stop around there. The other thing I'd probably look at as well is, I don't know if you guys use the measurement tools, but that previous move was around about 7%. I think that you probably want to go on and say, okay, well, this move is currently about 4% in, so you'd probably be looking for about a 3% move conservatively. It's a bit hard, setting some longer term targets when the market is trading at all-time highs. But, you know, there's plenty of room upside as well. So I don't think you'd be rushing to any conclusions that, you know, suddenly this is going to end. Truly the percentage that I was looking at is, so if you go and select the measurement, you can go, once you do that, in the top left-hand corner, there's like a 6.9%. So it says, okay, it's over 16 days that it made that move.
So Trudy, just below where it says XGO, well, just above where XGO, top left-hand corner, or between the two, that's where the measurement appears.
Yeah.
So it shows 459 points, 6.9%, and I've just moved it, but 16 bars is what it's looking at.
Yeah. So again, you're probably somewhere around about 6.9%, somewhere around about 7,300. Not high. Right?
Yeah.
7,400.
Cool. And just on that AWC thing, which we're going to look at, the IV rank is 47, which makes more sense. All right. So thanks for that update, Tim.
Yeah. Yeah. So anyway, so that's probably the couple of levels you could look at. I think that, you know, again, for those of you that haven't got in or thinking about it, the one thing I'll again go on and highlight is all-time highs, and we've got one lit long, which is the XJR. So now part of it has got to do, I mean, we probably need to dig a little bit deeper, because I think it's more the timing that's causing some of that, because you'd think STW wouldn't be too far away. It's probably actually ADX that's keeping that below, but you'd expect that's ADX. So that's 52-week high, QBE. So they're all sort of not trending, I guess is the point. West Farmers is high, a couple of sitting in that range. Macquarie 151. Wow. CTX obviously in takeover mode. JHX not really a whole heap of follow through, and the banks are low. So I think that these are the things that you'd be, you know, if you're sitting there thinking about, okay, from a pure technical point of view, from a pure trading system point of view, yeah, you'd be in your lit long.
Yeah.
From a I'm not following every single lit long and I'm not following the trading system point of view, you'd probably be it'd be more of a straddle type trade.
Yeah.
And then it comes down to, you know, how you see your view about that, and the two alternatives that I'll probably talk about there is you've got a straddle that you can do. A strangle, if you want to save a bit on money, my general suggestion, unless you really have done the straddle before, stick with the straddle. You pay a bit more, but you reduce the time decay impact. But the two strategies that I'd be looking at there is strip and a strap. So a strip is where you've got a slightly bearish view. It's a straddle, but instead you hover over that, but you buy one call and two puts. So you'll make more money if the market corrects. And if you've got a bullish view, you'd probably actually look at the strap. So you've got two calls and one put. And the impact of that is obviously quite different. We are definitely in bullish mode. March or April, take your pick. And I guess there you've got an interesting type of thing. If you anticipate that the next move is going to be about similar to what you had before, you know, you could edge out a little bit more out of the call, sell one call back, or, you know, if you're doing, say, you know, 3 lots here, or 2 lots, say, for example, you'd buy 4 calls, 2 puts, and then you could, as the market scans up and continues going high, assuming that happens, you can go on and sell down some of your calls until you've kind of got that straddle with a bit of a bullish view, and then you can sort of run it as is. So, and then if it completely goes the other way and you completely get it wrong, then you've got it on your put. The trouble is if you've got straight and it doesn't go anywhere, that's where. So if we go through this consolidation, which again, based on stats, it's probably not a likely outcome. Yeah. IV rank 22, go to vol, yeah, it's sort of somewhere around there, so it's not going to cost you an arm and a leg for it. Vol move up, again, you'd probably be looking at, you know, roughly where your prices are. So I think that in this kind of situation, I'd be leaning towards a strap or a strip, but because I think that, you know, no matter what's going to happen, you're going to have an opinion about where you think the stock is going to go, also where the exchange is going to go. And I think the things that, again, the no follow through from the big stocks is a problem without any doubt for this, and you know, and then the question is just how much momentum is going to carry through. Where is a lot of this momentum coming from? And so I think that you'd be in two minds. How long is this move going to go? Is it going to be a fake out?
Yeah.
So I think that's sort of the way that I'd look at it. You know, if you're in a lightly bullish view and you think that the market's going to go up, then long with it and sort of and just pick your stop, which might not be the 50-day moving average.
Yeah. If there's any sort of thing that I've learned over time is you just, when you get the breakout, you know, if it's something that you follow, you go with it. But
that's so important that you don't sit there and if you're following your breakouts, you can't just go, I'm going to pick this one, because that'll be the one that'll blow you.
But yeah, the next thing you know, you'll miss the one that, and then you'll chase the next one, or it'll just mean that you pause, which is not useful.
All right. Paul just mentioned, it's a good point, by the way. We're coming into dividend period, which may dampen upward momentum of index, but you know what? We're trading off the back of futures. Yeah. So for us, it doesn't matter because all of that's priced in. So unless dividends really outperform, which I don't see a reason why they would, but it's all based on the Marches and the SEPs in particular, and to a lesser extent the Junes because they don't have that much. But the dividends are baked in, you know, and yeah, it's an interesting time. Yeah, I think that if you're a lit follower, then that's not for you. But if you're not, I think that
the strips, the straddles,
I love the strap in this particular.
Little straps, And look, I'm getting flashbacks from when I went to St. Kevin's, the strips and the straps. But anyway, it's a bit political at the moment.
I didn't know you were St. Kevin's.
Junior school. Yeah.
Right. My brother was St. Kevin's.
There you go. Now
I've known you for how long? We clearly talk a lot about schooling.
Yeah.
The brilliant students we were.
The key with all of these long vol strategies is that you get in at the right time. And I think you've just got to be patient and you've got to be prepared to miss trades, right? Because timing in really nicely is where you make your money. It's your buy, not your sell with this stuff. And yeah, I think, and in this current market, that's probably the advice I would give. And we haven't, like today's a day that it probably doesn't line up for me because the breakouts occurred. So, you know, but that's just me. I want to trade off the pivot. So I entered in a couple of days ago, and you know, but
I honestly, this is where I like the strap. I think that the move is bullish. It's not, you know, it's not a strong bullish move. So I think that, but still, the stats are that it's more likely to continue going up than not. People sort of jumping on the back of, you know, actually one stock that I do watch that most people probably don't even know, but I got my dad to buy some Hutchinson HTA back in. He actually, because he didn't know what he was doing, he put him into a trading halt that day because his $10,000 trade took up the market because he just placed a market order and it just doesn't trade. But HTA had some sort of takeover situations. They were merging with TPG. It was blocked. Share price went up, so he bought it, I think, 5 cents or something, super fund, and it's trading about 15 now. But and it's been much higher. But it's interesting. I was reading some stuff about it this morning, and most people can't commit, even though that they know that the value overall of the takeover is probably higher, like 20 cents. But most people are waiting for, you know, a little bit of a pullback or whatever. But it's like, okay, it's going up. It's got a good reason to go up, and yet people aren't doing it or talking about it on things like copper. And it just goes to show the typical thinking that's going on right now in the market is going to be, we don't believe it, and thus we're going to think it's going to go down. And in reality, that's where the stats come from. It's more likely to continue going up. The funds are going to continue buying. There's no catalyst anymore. I mean, if we've just completely ignored the coronavirus like that, which typically would have been a catalyst,
Well, it's going to be interesting. WiseTech reported yesterday adjusted their or a profit downgrade of 27%. Apple obviously didn't say the words coronavirus, but said issues with manufacturing in China. A lot of the people that I talk to are business owners in manufacturing, hotels, those types of areas. Their hotels are empty. They can't get equipment out of Asia, or they can't get the supply they need out of Asia. Another one who sells fish can't get the orders have been cancelled. We know what's going on in education. I mean, but most of the companies aren't, like some of them will be listed, but a lot of them are not. So it'll be interesting to see how this plays out, and at what point is it going to be like earnings season when it comes out, or is it going to be? And is the market going to want to try and predict that? But anyway,
you're starting to sell me into a strip over a strap.
Well, no, I'm not. I'm just, it's just an observation. Right? It's not actually information you can necessarily use. But anyway, just to everyone who's on the session today, is anyone, what's the feeling out there? Are you bullish? Are you bearish? Are you sideways? And while you're doing that, so if you just type into the chat box bull, bear or sideways, I'll let you know what the consensus out amongst us traders is at the moment.
All right, Ryan, so there's an interesting question. The skew is to the puts for next month is what the message was. The skew is always towards the puts because it trades off dividends. Yeah, the dividends are priced in. So that's probably an important part. So you've just went in and moved some stuff up. I can just quickly.
Oh, sorry.
Yeah, I was just going to say, I'm just going to bring up an options chain just to talk a little bit about that. So XJO, a lot of bullish, interesting. So if we pick March, which is where I think those we're looking at, so you're 71.27, so 60 points of dividends are coming out in the next couple of, next 4 weeks or something, 5 weeks. And what are we? We're in leap year, aren't we? It's 10 days left in February. Sorry, 9 days left in February.
Yeah, right.
Yeah, 20 left. Olympic Games this year. I knew that because I remembered September 2000. Sorry,
you have actually referenced that before. Yeah. That's how you remember.
Yeah, and then I was like, oh, it's 2020. That's 20 years. I divided by 4. I've got a crazy way of thinking. Anyway, but if you talk about the skew, it's still sitting. So that's your 1050, 1040. So it's sitting around that 71.25, which is based on that March. So the skew isn't quite as, it's not what you'd expect. Typically, because of said futures and dividends.
Right.
So Brian's the only one who's
well, he doesn't actually say he's bearish down to 695.
200 points.
Yeah, 200 points. Cool. I reckon if it's going to go there, it's going to go there super quick. Moderately bullish, sideways, bull. All right, so it's sort of 80% bulls at the moment, and a couple of bears and a couple of sideways. Anyway, there you go. Going back to the strategy builder. Now, is there any trades that anyone wants to look at? Like, so there's heaps. There's a fair bit of stuff lining up. There's quite a few, say, breakout trades that don't have ADX support. That's been a bit of a theme recently. So there's quite a bit going on, and there's plenty to trade. But I think we're talking about straddles and straps and strips at the moment instead of iron condors. But on the directional side, there's been plenty. There's been plenty.
Did you ever know that I had this in here?
Here we go.
I'm trying to work on something a little bit better, but we kind of thought it'd
be better. Just navigate everyone there so they know how to get there.
So yep, on the dashboard, on the first thing you land, corporate earnings. So we've got an economic calendar in there. and that's saying, you know, all of the...
Is that on the trading dashboard or is that on the
That's on the
entry screen?
Entry
Is it on
screen,
both?
yeah, it's on the entry screen.
Right.
So it's got all that stuff. It's got some overnight markets. And I've just taken stuff from investing. It's been there for years. Most people don't know. But anyway, so that's probably an interesting place to look at some overnight markets. That's based on futures coming in as well. So
Yeah.
that's good. And then anyway, these are the things that are coming out. Sandfire, I remember that from my old trading days. There's a fair bit in Sandfire, but anyway, there's probably a couple there. Oz Minerals, also, and you can sort of go through and see and adjust the calendar. But anyway, so that's pretty pretty interesting. All right, so I'm going to take Brian's Wes Straddle. Ivy rank low, which is good. What are we saying? 16 now, 16. Good sort of pivot point type thing as well, with its breakout. ADX is low, so that probably helps around any potential kind of trend. Yeah, IV over HV is pretty good to look at as well. That's 90, which means that anything less than 1 means that implied volatility is a discount to historical volatility. Has Wes reported yet? It's not on our list. I haven't followed it, so I'm guessing it has, or it'll be up in March. Anyway, so that's pretty. It's an interesting play. I think that interestingly enough, I would have thought that Wes would be much more impacted by a slowdown in China.
Yeah. Yeah.
No, there you go. Brian just said reported yesterday, so.
Let's have a look at this. So 35 days is probably about right.
Yep.
That looks all right.
Yeah.
Yeah. All right.
Okay, just quickly. 45, 48, interesting is the break-evens. With 47, it'd be interesting to see. Yeah, look at that vol crush. So this is the typical. This is where it's good to look at this kind of stuff. So this is what ultimately a strategy would, which we're talking about. But interestingly enough, so 14, we're looking at the earnings. Which we're looking at. I think we were looking at those vol about 2 weeks ago, and it was coming up. So I mean, look at that. That's 13 to 23, and that's where that whole strategy of getting straddled, getting out just before the day of the earnings crush, and then it's right back. So it's an interesting, so big blue chip, and then it reported and went down. So that's the whole basis of the earnings crush play ultimately that we've been talking about a fair bit. Thanks to Brian expressing interest and alerting us to the fact that we should probably talk about it.
Yeah.
Wondering if the developers could please add an alert for implied volatility. Yeah, it's on the list, Carl. So it's not there at the moment, but we've got a couple that we're adding: implied volatility and some technical analysis indicators. I don't think we've released anything for that yet. Yeah, I think it's just price roll. Can you just click on the price roll? Yeah, that's not there. Yep. So that's a really good point, and it's going to be over IV rank as well.
Beautiful. So going forward, you'll be able to go in here and go price rule volatility, and then have set that rule.
Yeah.
Yeah.
Mike just asked about just about box spreads. Reality is you typically, I mean, it's probably better to research that online, but effectively a box spread is a zero-sum trade. It's called a broker trade on a couple of levels. It's because you've got legs. It's the idea is that what typically people do is that it's like an income generating thing. So you're using usually it's like against the margin line that you do it. You have to reduce your stuff, but we don't really do those.
Yeah.
We've had a look at them before. Any plans for use options?
The challenge, Mike, with box spreads is that no clearers in Australia
are really friendly
to it. So it uses up a lot of what is it?
Cap requirement.
Cap requirement and the like. So basically you're using them as your funder.
Yeah.
And we used to do stuff like that years and years ago, but you know, and it was a great strategy for personal use, but it became very unpopular about the time Pershing got up and about in 2016. Anyway.
Net plans for US options at the moment has been coming up a fair bit, but we do want to go on and get, you know, we want to do it right when we do it.
Yeah.
So later down the track, but no date on that. ALU volatility is making my Feb Iron Condor pretty interesting. I bet it's interesting coming up 1 week to expiry. I think it is now. And maybe we can bring up ALU. Paul just mentioned ratio callback spread is similar to the other strategies. Yeah, so if you want to add a bit of premium writing in there, the back straight, they're a pretty popular trade. The ratios. The only thing I don't like about the ratios is its capacity to blow you up, because effectively you're naked on one side. So I've got a bit of an interesting view on them. But so LTM's vols really dropping off down to 34, so it's probably good for your Iron Condor, I would think, right about now. But also it's at that period where the last week volatility starts, in terms of the individual volatility, probably stops mattering as much. It's more about what the strikes are, you know, where your probabilities, where your actual strikes were. So that's
that stats. Getting under stats the next reporting date. Getting that the next reporting date under stats.
Yeah.
Is that
we so
we have to manually do it.
Part of
Or
some
can we buy that data?
part of my other play, some of the stuff the trade floor is doing, and some of the upcoming acquisitions that may be announced in the next 4 weeks. Part of that is to get access to a whole range of new data as well, and more robust feeds and things like that. So
all right.
we will anyway. So that's
Excellent.
nice one, Brian. I just got filled in Wes 4695 March straddle. It actually too. Wes looks pretty good. I'll probably wait for the vol to come off a little bit just to kind of, you know, but that's okay. It's going to make a big difference. But I mean, I think it's interesting to see again how much that vol spikes ahead of earnings and that stuff. By the way, in terms of the ALU Iron Condor, what were the strikes for that you had? We really need to get like a list of these. I think where the strikes are, so we stop asking sort of silly questions. But that would be interesting, because I remember we're sort of edging towards the top end, and then that coming off, I would assume would be right back into the range. Probably looks pretty good now, because I think we don't have the legs on that stuff, do we? Yeah. Anyway, thanks, mate. What else have we missed? A back spread. Sorry, I probably misread your comment there, Paul. Yeah. So I was thinking about these guys, and then the back spreads are the opposite of that. So so very similar kind of strategy. David, so the LU is 38, 50, 42. Cool. Sorry. So just to be very clear. So I was talking about the ratios, and I missed what Paul was talking about as a back spread, which is kind of reverse of that. So
do you want to price up Paul ratio back spread
for ALU in particular?
Probably XJO would be one. Given we were talking about the strips and straps.
Yeah, sure. So anyway, I'll look at that. So 38, 50, 42. So you actually need a bit of a push higher now, David. That's so you probably wouldn't be too far away from your break even right about now. So got it right up to the top end. XJO options cookbook. So if you're if you're bullish, you do a back spread. So if you get it really wrong, you'll make money. If you're bearish, your ratio putback spread is a straight to go. Let's say that we are bullish. Let's give it 28 days. The way that it works is worst case scenario. In this case, we should probably add a couple more to that. But your strikes, your break even is 71.29. Your worst case scenario is really around about here. It's actually got 2 break evens. Interesting. I only one's come up, but anyway. So there's another one somewhere around here about 7,400. There's one comment saying, is it possible to see a full screen? I'm not sure why it wouldn't be showing up for you, Denise. But anyway, so if you get it really, really wrong, you'll make some money, so you'll effectively get your brokerage back in a bit more. And then you really want it, if it starts going up and you get it really right, is where you'll really make money. So it is an interesting alternative. The thing that I prefer would be typically what I prefer with these things is, because of where volatility is, again, I prefer the strips and straps. Probably be my thought process around it. If the IV rank was a little bit higher, you'd probably be looking at these because, yeah, you're a beneficiary ultimately.
So that's interesting. Yeah.
Which one?
So you want the move to happen pretty quickly.
Yeah.
Otherwise, you're going to get super nervous sitting in that trade late in the play.
Yeah, I mean, well,
there's a lot of room for it not to.
The typical playbook there is if you're sitting there and you're like in 14 days and it's in a dead zone,
yeah,
you change the strategy. Like you close it or you set it up again. So effectively like a roll type thing. That's
14 days cost you $288 there, 300 there, and you're basically Stevens if it comes back. Making a little bit of money. So it's not like, yeah, I don't mind it. On a breakout, if you think it's going to break out.
Yeah.
If something actually really happens, it's
cool. I mean, the idea is that you get some deal in there. The thing
would you go out a month, Paul, or would you be in April, or would you be in March?
Well, you just your last 14 days are going to be pretty bad. So the thing that I inherently am not a fan of is you need to have a massive move for it to typically pay off. But yeah, you do want to play around your time, get out earlier. It's interesting. I know some traders that actually absolutely love ratios. There's a big guy in Melbourne who loves his ratios.
Yeah.
On both sides, and I've never been a fan. There's been times when I've really needed them, but typically I don't expect such large moves.
Yeah.
But yeah.
Okay. Well, thank you, Paul. Like it, have a look and price them up. If for anyone else that's interested, just pick it out of the cookbook and you can play around. I don't mind that. All right. So, beautiful. All right, guys. Any other questions? Anything else we can cover? Interesting times. I don't know. We'll just be technically watching at the moment. You've got to be bullish.
To hear Bernie Sanders is out with a lead of the Democratic race.
He's out with a lead.
He's leading by margin in the preliminaries, which probably starts pointing toward the Trump re-election.
Who else is getting into the mix there? Who's Joe Biden?
Do you reckon Bloomberg is going to start putting a lot of Bloomberg for
for president of the world soon.
Yeah.
Or whatever the Bloomberg news. Anyway, it'll be interesting.
All right, guys. Denise has asked, is it possible to see full screen? Did anyone else ask that question? I'm not sure.
No.
Is anyone having a problem seeing our full screen? Anyway, we're going to call the session to a halt now. Thank you very much for coming. Again, if you would like to come to this meetup, there's been a few people that have typed yes to different questions and answers, so maybe just write MEET, and we will organise to get you along to that. Hopefully we see you there next Wednesday evening for a drink and a chat. It'd be great to meet everyone personally if we haven't met you yet, and for all of those that we have, it'd be good to catch up again. And thank you everyone for coming along today. Denise has asked, where is it being held? It's going to be held in the city. It's at the Jasper, which is near the Vic Market, the Queen Victoria Market, just on Elizabeth Street there, and there is lots of parking at the market.
Yeah.
Although, hang on, is it Wednesday night?
Yep.
Night market. So there'll be parking around. You probably get parking at the market even on night market. People tram it there. But after our event, you'll be able to roll up the hills of the night market and listen to a band or something like that. I was there last night. Don't have the African meat. I won't explain why. Yeah. Beautiful. Guys, hello. Any luck with the above question?
No, Mike, I did actually think it was about the box spread and the US option.
Yeah, Mike, we did talk to that regarding the box spread.
Maybe just listen to the replay.
Yeah, it will be in the replay, but in short, it's not something that is easy to do in the Australian market because of the capital required by the clearers. It used to be something that we did in our own accounts, and other people I did anyway, for as a cheap financing option or something similar to that anyway, but it just really got ruled out probably about 2016. So US market, I believe people still do that kind of stuff, but here not so much. Thanks, Mike, but good question.
Because your margin lending account is effectively part of your Reg T there. So that's why.
And Mike, no plans for US options immediately, but it's on the list, but it's a pretty long list. So not for a while. The other thing is, for anyone who does want to complete that survey that I put up earlier and provide a bio, we'd love it. We'd really appreciate it. It's a great giving back to the community of other traders as well, and we'll definitely, if you're happy with, get that published by the ASX and on our newsletter as well. Perfect. Beautiful. Thanks, guys. Have a wonderful day, and good luck with your trading. Cheers. Bye.